You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is. Know what a week it was across the broad spectrum of products trading over there at CME Group. We're going to talk energy, rates, ags, metals. Who knows what the heck's going to make it on the show? Crypto, I got a feeling that one might make it on the show this week, and a whole bunch more. Lean hogs, you got to tune in each week to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating, ever-compelling Options Insider Radio Network, reminding you, if you like what you hear here, you want to go above and beyond, you want to get live shows throughout the week, as well as awesome pro Q&As. We had a great one earlier this week with Mr. Tony Saliba himself over there holding down the hot seat just to come in and answer your questions. How cool is that? Coming up tomorrow, Options Oddities exclusive for you folks as well. You guys know where to go to learn more about all that fun. theoptionsinsider.com/pro. Get in there before the end of the month. Every month we give away one awesome pro trading crate to our lucky pro listeners out there. So you got to be in to win it before the end of the month for October. So we're looking forward to that one as well. Each one, we got to put out some pictures of what we've been sending out because it's been cool stuff. These are completely bespoke, one-off for each of you. Pretty cool stuff. Check it out. theoptionsinsider.com/pro is the place to go to learn more. And we need to go out to, well, last time he beamed into us, he was across the pond in London. We have no idea where he's beaming in from today, but we are pleased to welcome once again the once and future Dr. Vix, Mr. Russell Rhoads, holding down the double duty of CME Group and FTSE Russell hot seats. He is a busy fellow today. Mr. Rhoads, welcome back to the program. Where are you beaming in from today? I'm going to guess Indonesia.
No.
Oh, I was off.
I'm actually at my kitchen table.
Oh, so your kitchen table in Indonesia. I was close.
It's like such a contrast to last week when I was, what was it, 2 weeks ago? I guess that was in London.
I think it was 2 weeks ago. Yeah, I was going to say, was it last week? When you were watching Bond films in the birthplace of Bond.
Right. Yeah. I spoke to you right after I had been able to see the Bond film, and I kept my mouth shut about it. I continue to keep my mouth shut about it, although I will tell you that Darth Vader is not James Bond's father.
Dang it. Now you've crushed my hopes for a twist coming at the end of that finale. But you know what's coming now, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
Light side, dark side. See, it all blends together here on the Movers and Shakers, of course, where we break down what was moving to the upside, a.k.a. the light side, and to the dark side over there at CME this week. Mr. Rhodes, you know what I'm going to ask you next. Should we go back to your old friend Darth Vader? Should we go to the dark side, or should we go to the light side to kick off the week, sir?
Darth Vader was a precursor to the direction that I was going to go. You totally picked up on that.
See, I get your vibes. I've talked to you once or twice. All right.
So, let's start to the dark side.
All right, red lightsabers a go. Here we go here. Dark side time here. By the way, listeners, if you guys want to see this for yourselves, CME usually tweets out the TWIFO report, the Movers and Shakers report, I should say, ahead of time, right ahead of the show. We usually retweet it. So if you follow one of us, you can see it. And if you look at it this week, it seems like it's biased to the green, but not quite as heavily as it has been in past weeks. You know, we have seen not that long ago, we have seen charts that were just 3/4, if not, 80, 90% biased in one color or the other. This week, it looks like it's a little north of 50% to the green, but not too aggressive. And of course, the actual depths of those moves, the size, the scope of those moves, actually, we have the dark side winning that this week, but we'll get to that in a little bit. Number 5 to the dark side. By the way, if you want to compare this, how much it cost you to break in to the top of each one, the top 5 of each, dark side costs you 10.5% almost. So you need a pretty impressive move to break into the top 5. Easy for me to say this week. Can't say it. You need an very impressive move, I should say, to break into the bottom 5 there in the dark side. That gets you to Nat Gas, number 5, off nearly 10.5%, 10.46% this week. Number 4, it's a week, it's a day, it's a minute. Pick whatever time frame you want. Chances are lumber is moving within that time frame. And over the course of the past week, lumber came in at number 4, off nearly 12%, 11.81%. By the way, it was our number 1 mover to the upside last week, up 12, almost 12.25%. So pretty much a whole lot of nothing week to week in lumber. Up 12%, down pretty much 12%. Number 3, palladium. This one's been a big mover of late as well. Off 13.83%. It was number 1 in the dark side last week, though a quieter week last week. It only cost you 5 1/3% to take the top spot to the dark side last week. This week, a little bit more aggressive. And again, before you get all fired up, unfortunately, no real options volume on the tape this week for palladium. Number 2, our old friend lean hogs, popping back up there again, off almost exactly 15%, 15.02%. And then number 1 with a dark side bullet this week is the Eurodollars, off 26.53%. That's some big movements out there in Eurodollars time. And then to the upside we go here, listeners. Let's go to corn. Number 5 to the upside. Corn. Got some ags lining up the upside here. Corn up 3.63%. It was number 4 in the other direction last week. Off 3.25% last week. So a couple nice weeks of swings, pretty much back to almost unched again for corn as well. Number 4, oats, up 4.25%. We tried to delve into oats in the past. Again, not a huge options player out there. Number 3, soybean oil. They do some paper out there. And this week it's up 5.54%. It was number 2 in the other direction last week, off 4.17%. So soybean oil erasing its losses and then some this week. Number 2, another frequent offender, the yen-denominated Nikkei index, easy for me to say out there. It's up 6% exactly this week. It was in the exact same spot last week, number 2 to the upside, and it was up let's see, last week up 9.18%. Before you get excited, there are no listed options on it. I wish we could break it down, but unfortunately can't go out there. And then number one with a bullet this week, you could probably guess. I've said it before. There are a handful of frequent offenders in this spot. Lumber is certainly one of them. Lately, nat gas is one you could probably throw in there. And then, of course, Bitcoin is another one you can usually throw in there. It has a pretty good chance any given week of being the top mover in one direction or the other. This week, it is Bitcoin to the upside, up nearly 11.5%. Of course, a lot of big news, a lot of big developments, maybe some game-changing news out there in the crypto space, and some interesting volume to boot. So I think, Mr. Rhodes, we have to begin our journey there.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody. Let's get to it. Time to talk some crypto. Of course, the TWIFO reports are available in your hot little hands completely for free all week long, 24/7, 365. If you want to check them at midnight on Christmas Eve, you can do so. You won't see a lot of paper, but you can do so if you are so inclined. How do you find them? CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work, should get you to our reports. And then for these, you want to go to that asset class drop down. You'll see cryptocurrencies right there in number 3. It's all alphabetical. Pull it down. We're going to hang out in Bitcoin today, listeners. Before we get to all the volume and all the numbers, Mr. Rhodes, I'm very curious for you. Obviously, a very big week for the crypto space. We touched on it on Monday's Crypto Rundown show, but back then, all the way in Monday, seems like a lifetime ago, it was still theoretical because the ETF had not been approved. Of course, fast forward to today, and the ETF is approved. It is listed. It is BITO, ticker symbol, which is, of course, the PowerShares Bitcoin ETF. Surprising, for some reason, surprising a lot of people, even though I think if you read the tea leaves, it wasn't that surprising that it would go not as a quote-unquote pure play spot ETF, but instead pricing off of the CME Bitcoin future. So, Mr. Rhodes, people have been waiting for the ETF for quite some time. Some people are debating whether this is it. I'm curious for you. What are your thoughts on the ETF in general? B, do you think this is the game changer the market has been waiting for? And C, what do you think of them, basing it and driving it off of the futures rather than the spots? There a lot to unpack there.
Well, first, I think basing it off the futures is a really good idea. The problem with spot Bitcoin is you still have it trading at a lot of different places, and
yeah, look at the prints today. We'll get to that in a little bit.
But yeah, that's I guess that I'm giving you all kinds of lead-ins there. But that is one of the issues with Bitcoin is there's not one standard exchange in one thing that can be considered the closing price at a certain time. That was one of the things that other entities that started the futures contracts tried to deal with. And the way they would try to deal with it is maybe using a venue where only 10% of the action is happening. And I don't think people were very happy with that. I agree with the first one coming out in the U.S. being one that is priced off of the futures contracts because we have a daily settlement price in the futures contracts. And also because it allowed using the futures, it definitely allowed them to use the ETF format as opposed to an ETN. I always have a lot more confidence with ETFs versus ETNs just because you got to hold those underlying securities if you issue an ETF. And that leads to increased volume in the front 2 month, I almost said VIX, the front 2 month Bitcoin futures contracts, where you can see that rebalancing continuously going on. It's going to add liquidity to the ecosystem. And I've been reluctant to say something is a game changer in the past with Bitcoin, because, they said when the futures got launched at a couple of places, that was going to be the game changer. And we subsequently lost 50% of Bitcoin value.
It was a game changer, but perhaps not the way everyone thought.
Yeah. And I was hesitant probably from that experience to get overly excited about this launch. But the fact that Bitcoin has held up and, in the amount of volume that needs to be done, fits well within what I've seen as the average daily volume on the front two Bitcoin futures. So I don't think it's going to have any, negative impact on those on those two futures contracts. I think it probably is a game changer because it increases the liquidity ecosystem, much like VXX did for VIX. And I know from volume analysis, et cetera, in both the VIX futures and VIX options, that the VXX being launched was a game changer there. And the way that this has been smoothly launched and Bitcoin didn't sell off immediately afterwards, I think this actually is a game changer for the Bitcoin space.
I'm sure the folks at CME, we just had Tim McCord on, who heads up the crypto section. I'm sure they're pretty excited about this because the futures are now back up to some levels that they haven't seen in quite some time. In fact, today, as of the most recent trading day, futures at about 23,000 contracts, 22,822. They haven't seen those kind of levels in quite some time. They were hovering around the 12K to 16K range, if not lower, for a lot of the summer period out there. So this certainly driving a lot more paper out there. Also, pretty much the busiest week we've seen on the Bitcoin options front. We'll get to all that in a second. But at first, I'm curious. You kind of mentioned VXX, Mr. Rhodes, and the analogy is an apt one. Obviously, we talk a lot in the volatility space, and you live in that space when we're not here on the TWIFO program as well. But VXX is a product that attempts to replicate a VIX futures position, does so, you could argue, the efficacy of how it does so, but also one of the problems with doing that is the drag that results, the inevitable roll yield that comes into play that ends up becoming a headwind for the product's returns and makes it a great product to fade. Now, we have a similar structure. I'm not saying it's going to fade as aggressively, but we have a similar type structure now. We are attempting to replicate some sort of futures underlying using, this basket of products to do so. So inevitably, depending on your rebalancing, you're going to have some sort of drag, but you also have this product that is super hot, super speculative, and the bid is to the calls all the time. So it's kind of an interesting juxtaposition. What are your thoughts on the notion of how they've constructed this? And do you think this is going to be shall we say, a drag-heavy play going forward? Or is it just the overwhelmingly bullish nature of the paper and crypto? Is that going to a rising tide is going to lift all boats, Mr. Rhodes?
I think a rising tide will lift all boats. Also, I've got my Spencer the intern down at IU who's pulling all the historical data on the Bitcoin futures as we speak. And I'm going to take a look at what the curve has looked like over time and try to guesstimate what kind of drag you would see with respect to I guess we're going to call it the Bitcoin term structure. Right now, there's only about a $900 difference between the front month and the second month. And they're not going to have to trade too many contracts to rebalance. I looked at what the portfolio holds, and it was, I want to say about 1,800 of the November and maybe 1,200 of the October, something like that when I was looking at it earlier this morning. So, maybe you're only going to have to roll 100 contracts or so. But if you've got a lot of inflows, you may only be buying both contracts. If you've got enough of an inflow to offset the roll, then the roll may not have a negative impact, at least if assets under management continue to experience rapid growth, which I don't think we saw the same sort of thing with VXX. So that it's a wait and see type thing, but I don't think it's going to be impacted it's not going to have the same sort of consistent negative roll yield that we associate with VXX.
So we're not looking at the next VXX, or dare I say it, UVXY. That would be crazy.
Yeah.
Not quite the buy the 10 put, set it and forget it type trade out there as you see in some of those products. But interesting stuff nonetheless. You're right. I'm kind of waiting for that data as well. And there are obviously a bunch of wrinkles that could be thrown in there. Bitcoin gets crazy as we've seen over the last week. We could see that front portion of the futures get into, backwardation, in which case all bets are off for this type of product. So a lot of fascinating stuff. Speaking of getting crazy, we kind of have to get to it now. We have a question about this. I was going to save it for later in the show, Mr. Rhodes, but we're talking crypto. Let's just get to it now. This comes from Mr. T, also B.A. Baracus himself, listening to the show. Mr. T wants to know, hey, did you see those Bitcoin prints? Please discuss. And he includes a tweet here. These went up on Binance earlier this morning. Obviously, all the headlines these days are Bitcoin over 60,000, hit 66,000, new all-time highs. And now we see Binance hitting some levels. Looks like it dropped to about 8,200 this morning. Someone looks like apparently made a bit of a fat finger, tried to sell. Again, all these people out there who are lamenting using the futures and instead of using the spot. Well, look what happens in the spot sometimes. Someone tries to sell 592 Bitcoin and they crushed it on Binance from over 60,000 down to 8,200 in 1 minute. So some lucky fool out there today got to buy Bitcoin below 10,000 this morning. My goodness, Mr. Rhodes, what are your thoughts of that? And again, maybe a bit of a counterpoint to everyone out there who's arguing we need the spot ETF. These types of things maybe make that a little bit more difficult to do so.
Well, first off, I'm going to put you on hold while I put in a good till cancel order to buy Bitcoin at 9,000.
Yeah, who knew I needed my stub quotes out there? Foolish me, I left it out. My goodness.
Yeah, I don't know. See, the thing is, if something like that happened first off, it couldn't happen at CME Group because they've got little stopgap measures in place. But if something like that were to happen, CME Group might be able to step in and
they would bust that or adjust
this person out. Yeah, and that might be a pure example right there why we got a futures-oriented Bitcoin ETF first, as opposed to a spot one. And maybe that market's not ready for one that's based on the spot price. Again, because of the market structure issues behind how spot Bitcoin trades. It just trades in a bunch of different places, and there's no. Stocks trade in a bunch of different places too, with all the different electronic communication networks. But at the end of the day, like our friend Portillo's that went public today on the NASDAQ, there is a home exchange where you get the official closing price each day. You just don't get that out of the spot Bitcoin. And I have a funny feeling that maybe 5 or 10 years down the road, there will be more of a uniform way to come up with what the closing price for Bitcoin is from day to day.
No, it's so funny because the old school trader in me, that was my exact same response as well. Oh, they're just going to bust that. Or they're just going to adjust. Then I thought, wait a minute. No, they can't. They can't bust it. So again, that's where the opposing natures of crypto and traditional finance kind of come at a bit of a loggerheads. We like the open ecosystem. That's what drives a lot of people to crypto. But in a time like that might be a time when maybe you want a little bit more of a robust ecosystem behind you to be able to adjust that. I mean, it sounds good. Someone got a lottery ticket and they bought it below 10,000. But for the person who made that error, that's just catastrophic. And that could drive a firm out of business or things like that. And that's something no one wants. So at the end of the day, those are things that would be better to be adjusted or busted to have that mechanism. And unfortunately, that's not really in place, at least that I could see. So intriguing stuff out there. What are your thoughts on these crazy prints? I'm sure you have them, listeners, as we keep on rolling. Speaking of crazy prints, let's get into it since we're hanging out here on the old TWIFO report. Like I mentioned, pretty much, as far as I can recall, the most active week we've ever seen in the CME Bitcoin options. And again, that's not saying much. I'm looking at 514 contracts on the tape. So before you go throwing a huge party, that's not exactly, you're not talking Eurodollars numbers here, but still, this is a product that you might see some weeks do 40 contracts or 120. This week doing 514, that is no small feat. If you are intrigued, if you are curious, which is interesting, because usually the lion's share of the paper, if you listen to our Crypto Rundown show on venues like Deribit and others, is all upside all the time. It's the 60,000 calls, it's the 100,000 calls, 120s are active these days. The most active contract on CME this week, the 56,000 put. Intriguing, doing a whopping 31, which when you do 514, 31 is actually nothing to sneeze at. The vol over there at CME, by the way, an 86 out there right now, which again is kind of in line with what we're seeing on other venues. I'll just do a quick breakdown here because the lion's share of the volume, such as it was in the November contract that has about 35 days to go, doing about 40% of the paper. So we'll hang out there. The vol out there is actually 87 and a quarter, so a little bit higher than the front month. Skew, the puts last week were kind of unched to the at the money. This week, they're 3.3% bid. Meanwhile, last week, the calls were 4.2% rich. This week, they're almost flat. They're about 1% rich, which for Bitcoin is interesting and maybe a little bit anomalous out there. And again, the most active contract, the 56,000 puts, doing a whopping 31 out there. I kind of joke, not a lot of paper, but again, this is one of the more active weeks we have seen, and not the most active week. Anything surprise you out here? I was looking at the numbers here from a crypto perspective, and probably what's going to be a more active product to come, I would think.
Yeah, I definitely think it's going to become more active just because, like we said, the ecosystem's going to expand or has, a new leg to it now. I'm not overly surprised that the puts did some volume because, and I'll go back to, that where I hedged myself with respect to this being a game changer or not. The pattern that we've often seen is there's something that happens that changes the way people can get exposure to Bitcoin, or even something as goofy as Elon Musk going on Saturday Night Live, which is going to provide a bump to some cryptos. And then it's the old buy the rumor, sell the news thing. And you had to wonder how much of the move up above 60,000 was associated with knowing that the Bitcoin ETF was coming out this week. And don't you think those of us that have been paying attention to Bitcoin relative to the listed markets for some time, we're probably expecting some weakness after this thing launched, and because that's just been the pattern. So that may be where those put trades are coming from. And it was the biggest trade from what I see, and with October, November, and December were all on the put side. And I doubt that's common from week to week, even though you said there's not a lot of volume to compare things to. And then, of course, you're going to see the skew flattening out some if you get a handful of people that think we're going to get a sell-off versus continuing to move to higher levels. So I think both of them are not overly surprising. Doesn't necessarily mean that they're going to work and make money off of them, but not overly surprised that somebody might be willing to take a flyer on buying some Bitcoin puts just before or in conjunction with the ETF launch.
That's the same guy who crushed it to 8,200 on Binance. The guy's laughing all over the bank right there. Speaking of surprises, though, I did have a surprise earlier this week during our Crypto Rundown program. We put a flash poll up during our show. This was before the big ETF went live out there. Now that it's live, it might be worth doing this poll again. In fact, I think our producers might be putting out another flash poll on this as we speak. But we asked you guys earlier this week, do you guys plan to trade this new ETF based on the futures? Yes, no, we're not sure yet. And it came out, Mr. Once and Future Dr. Bix, at an exact tie, 45.5% for yes, 45.5% for no, and 9.1% squeaking in with not sure yet. That kind of surprised me. I thought that would be much more biased in one direction or the other, Mr. Rhodes. So we're going to put that poll out again now that it's live. You think A, are you surprised by those results? And B, do you think we'll get the same results right now, sir, now that it's live?
I think now that it's live and it's been solid, but they launched options on it today as well. So I bet you if you relaunch the poll right now that you're going to get more yeses than nos.
We shall see. That's another question we've been getting a lot. Are they going to launch options? Are they going to launch? It seemed like it was. I didn't see the circular out from OCC, but I did see SIBO listing looked like a weekly. So that seemed like that was the starting point there.
They're listed. There's a ton of them listed. And the only reason I know this is I was speaking with somebody at EQ Derivatives this morning who's doing some work in this space, and I was helping them with the ETF versus ETN thing. And then I was like, let's see if the options are out. And I went to the OCC's where you can get the option chain there, and they've got them going out. They've got leaps.
All right, so there you go.
And they got every week up until December 3rd, I think.
Usually they tear up my inbox with announcements. Hey, these are going live. I didn't see any of that, which kind of made me wonder. I was seeing tweets about it, but I hadn't had a chance to dig through that. I didn't see it on the cursory glance at OCC. So that's good news. All of you out there who want the options on Bitcoin, don't want to trade for whatever reason, the options on the futures. Obviously, the options on the micros still aren't live yet. Intriguing stuff. So there you go. You actually have an equity option on a Bitcoin future. You got all best of all worlds there as we keep on rolling. Let's see, Mr. Rhodes. We're talking about equities, talking about volatility. It makes sense we roll out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities portion of the show. You guys know how to find this in your drop downs. Pop it out of cryptocurrency, as difficult as it may be for some of you out there, and scroll down to equity indices. We're going to hang out over there in the Russell 2000. Maybe we'll swing by the E-mini S&P a little bit today as well to see if we get some of those crazy prints like we were talking about last time on the show. But before we get to that, let's break down the other side of the equities coin, which is, of course, volatility. Coming into showtime, a whole heck of a lot less of it than there was this time last week, though it kind of depends where you're looking. RVX, for example, which is the VIX of the Russell 2000, kind of unched down about 1/4 point from this time last week, so not quite breaking through the 20 handle like we thought it might, at about a 20, a little north of 20 3/4 this week. So it was about 21 last week, down to about 20 3/4 this week. VIX coming to showtime below the 15.5 level, listeners, 1542. That puts it down about 1 2/3 points from this time last week. So obviously that spread going to widen out a little bit this week. VIX moving, RVX not so much. VVIX, which is the vol of vol, threatening to break the triple digits level to the dark side, to the other direction, down to about a 102 and about 2/3 there. That puts it down almost 3 points from this time last week. Again, we haven't seen it below triple digits too often since the pandemic began. It broke through there a few times, but hasn't really hung out there. We shall see if that's the case coming up this week. And Vol Q, aka the at-the-money vol of the NASDAQ 100, kind of holding firm at about 15.5 this week. That puts it down, it looks like a little over a point from this time last week. Again, interesting stuff. The NASDAQ vol has been interesting to watch of late. That puts that VIX to RVX spread at about 1.5 points wider than this time last week. Again, pretty much all of that coming in the movement from the VIX to the downside. And the VIX to vol Q, like I mentioned, not really moving a whole heck of a lot. So that puts that spread pretty much unched from this time last week. Listen, Mr. Rhodes, obviously you hang your hat out there in vol land. What's catching your eye in the world of volatility and indeed equities this week, sir?
Well, I'm surprised that Vol Q is so close to VIX right now. We've got, I want to say, 6 of the 10 largest NASDAQ stocks reporting next week. We got Tesla yesterday, and the reaction from Tesla is pretty muted. Last I saw, it was up around 2.5% or so, which is much less than its average move of about a little of like 5 3/4%. So, you know, that one's kind of been a dud, but you got to assume that there's going to be a lot of questions about is the supply chain issues or labor issues hitting your companies.
So that's Racer Kunai, high-performance ARGB fans designed for maximum airflow, minimal noise.
I would expect a widening out of Vol Q relative to VIX. And if we got to do crystal balls on that one, I would be taking all that to an account and saying that Vol Q this time next week will probably be, because they'll still have a couple of big NASDAQ stocks to report, probably be at like a point premium relative to VIX. And then VVIX, that's always a good leading indicator with respect to VIX. VIX is breaking new post-pandemic lows, and we're all just breathlessly waiting for VVIX to get down to maybe the low 90s or so, and maybe confirm that we're moving back into, or going to move from a high volatility regime into a moderate to low volatility regime.
Let's see what kind of regime we're moving into. Out on the old TWIFO front, let's start in the world of the Russell 2000. Kind of a light week volume-wise out there in Russell 2000 land this week. And again, like every equity, the lion's share of the paper is going up in that contract, going out in one day with nearly 50% of the paper going up in that contract. By the way, the Russell 2000 coming into showtime at about a 22.88, almost 22.89. It puts it up about 1% on the week here. The most active month outside of that, or I should say month, most active contract weekly out there in the Russell 2000. Looks like it's the week 1 November. Outside of the front month, they did about 14%. Actually, let's go to the D's. They did about 25% of the paper out there as well. In terms of the vols, at about a 1930 out there in the D's contract. Get a little bit closer. You get to the week 2 and week 1 November contracts are at about a 16.5 to 17 vol out there. So 1930 a little bit closer to where RVX is right now. Remember, RVX is that kind of rolling 30-day measure, plus it incorporates some skew, which is why that number is going to be a little bit different than your straight at the money vol from these contracts. In terms of the skew, the puts last week, 16.1% rich. This week, 18.1%. So getting a little bit richer, but again, that is lighter than we have seen in a lot of the indices of late, even if it sounds like a lot. Oh my God, 18% rich to the at the money. How expensive these puts are. Also remember that vol has come in a little bit, so the overall level you're starting with is lower. In terms of the calls, last week they were 11% cheap. This week, 12.8% cheap. And in terms of action out here this week, people like these aren't even small delta. These are close to at the money. It's the 22.95s. I said we're at a 22.88 right now. The 22.95s going out tomorrow have been leading the dance this week, listeners. And pretty much all of that today, which is interesting. So these are flirting with being something. They're no delta right now, very small, but they have a chance of being a 100 delta very quickly. So do they count as small delta or do they count as large delta call? I guess it kind of depends when you check in. But we shall see how these go out. Right now, they are in the small delta camp, so 22.95s leading the dance. Also seeing the 18.80 puts out in December, also pretty active out here in the Russell 2000, doing about the same amount of contracts. Those were active pretty much yesterday, and nothing else is close to those. And that was all opening. So opening on the 18.80 puts, that's kind of in keeping with what we've seen out there a lot of late, which is kind of interesting and aberrant farther out of the money put prints going up here in the Russell 2000. Since we're hanging out in equities really quickly, we saw some crazy prints out here on our last shows in the E-mini S&P 500. Let's go check out there again really quick. Again, go to that drop down, go back out of the Russell 2000, back into the E-mini. As you'll recall, listen, coming into Showtime, we're at a 45.32 in the S&P 500. And we talked about puts, they were the 3,600 level, I recall last time, going up with a day or two to go that were 600 to 800 handles out of the money at the time. It seemed like very strange paper. We talked about it again on our Options Oddities show because it was so strange, so aberrant. Let's get out here now and see what we got going on here in the E-mini S&P right now. So we're at about a 45.32. And you know what? The most active contract this week, the 38 quarter puts. So not quite as out of the money, but pretty darn close. Going up on Tuesday, 28,500 of these things. So yet again, and these are all opening. That was all opening papers. This is not a roll. They're not taking this off and moving this to, a couple of weeks, couple of months out. This is opening paper with 3-4 days to go of puts that are 700 points out of the money at the time. I think that the S&P was trading at the time there. Mr. Rhodes, I'm curious if you have noticed these as well in the E-mini. I should say, by the way, that's not the most active contract in the E-mini, which, by the way, this week has done a total of 2.3 million contracts. The most active title looks like it goes to the 4,200 puts that are going out in week one in about 8 days. In about 8 days of 4,200 puts. That makes a little bit more sense given where we are. Mr. Rhodes, have you noticed these very far out of the money weekly puts that seem to be going up week after week, 600, 700, 800 points out of the money, like clockwork here in the E-mini? Have these come across your radar?
They have, and you just got to wonder if you've got some premium sellers that think they've found the golden ticket to making money in the markets, where they just pick up those nickels in front of the steamroller over and over again, but they can get run over quite easily, and they will at some point if you keep doing things like that. So that when I see those out of the money puts, unfortunately, it seems like I see them. I see them being sold as opposed. They look like they're trading closer to the bid than they offer, and that scares me a lot. And not much scares me.
I saw them printing last time. They're trading like a nickel to a dime, depending on the strike. Again, it's hard to get full execution data on these things, but still, it is fascinating to see. Speaking of fascinating, before we roll out of equities, sir, I know you've been doing some diligent research on equity volatility. What's been up your sleeve over there these days, sir?
Well, I've been looking at seasonality and equity volatility, and I wasn't looking for it, but I came across it. It appears that you get a pretty nice and consistent outperformance of small cap stocks over the last 2 months of each year, going back several years. And kicking around the why behind that one with people that like to think about the whys. It just may be that the Santa Claus rally is decided to focus itself in on smaller cap and maybe just domestic only stocks in the U.S. But a good time to be bullish small caps starts a week from Friday. And I'm going to be writing something up late next week and taking a look at what's going on in the markets and maybe coming up with some option trades using Russell 2000 options that expire very close to the end of the year to put on some bullish positions.
I like that. You mentioned that before on the show. The Santa Claus rally, very aggressive out there in the small caps. So unless you think it's played out, sir, or listeners out there, perhaps a week from Friday, you shall have a different tune. Speaking of different tunes, Mr. Rhodes, we've already talked about a bunch of interesting things on the show, but where should we take our movable feast next? Of course, looking at our movers and shakers, we have a lot of things that don't do a lot of options volume, like oats and palladium and lean hogs and lumber, but we also have some things that do, like nat gas, like corn, like the beans, and a few other things. What's catching your eye out there?
Let's do nat gas, just because both the realized and the expected volatility have been ridiculous.
That it has been.
And I don't think that story's going away.
Does not seem to be the case. So let's get out there a little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's do it. Let's go to the drop down and let's go back out of equity indexes where we were hanging out and just go one notch above it to energy. Then usually we go out to crude oil, but lately we've been going out to nat gas a lot. We're going to go back out there today. Remember, nat gas moving and shaking pretty much almost every week. It's one of those names you can now lump in there as if you had to guess what the top mover and shaker in either direction was in any given week. Nat gas is certainly one of those offenders you could throw in there. This week it is off 10.5% from our show this time last week. Mr. Rhodes, before I dive into all the numbers here, obviously this one's been kind of hard to ignore, even if you don't pay attention to energy markets, because, traditionally nat gas was, I wouldn't say boring, because it had moments when it could gap around, but it was a traditionally siloed U.S.-dominated market, didn't really get buffeted by, the storms going on overseas. These days, a very different market, and we're seeing very different price action as a result. What's been lighting up your tape out there, sir?
It really is just how high the at-the-money implied volatility continues to be. And back when I was over in London, which seems like years ago, but it was just a couple of weeks ago, we had this exact same discussion when nat gas had been up an awful lot. It's going to remain, if you look at the option market, it's going to remain very, very volatile through this winter season. And there are just lots of different macro issues that are going to be pushing and pulling on this thing. Heaven forbid we get a really cold winter, because supply is already very, very stretched, and not just here, but definitely over in Europe. I was doing on the ground research and told you that there was yellow tape up around several petrol stations. They couldn't get gas where they could get gas. The gas price was over $7 a gallon while I was in London. This is not, and it was based on some supply chain issues. Those same supply chain issues are going to bleed over into the natural gas area, and it's going to be a very wild winter, to put it at the least. And that's typically one of the more volatile periods for nat gas. You just mentioned that it seems to kind of hang out and then gap one way or another. I think it was gapping in a seasonal basis, but now it's gapping on a weekly basis, and that's nothing better than 100% implied volatility for something that's moving 10% a week.
Indeed. Let's look out there for ourselves and see what exactly we're seeing out there in the land of good old CME. Of course, go to that nat gas top of the drop down list. Let's see how active it has been this week. 424,000 contracts on the tape. So nat gas, nothing to sneeze at out there, and kind of behaving like an equity right now, where the lion's share of that paper, 31.6%, going up in the contract that expires in 5 days. Don't see that too often outside of the equities. That's the NOVE contract going away in 5 days. Let's go a little bit farther out just so we can have a little bit more sanity here. Let's go out to the DEES contract that has 34 days to go, also doing about 15.5%. So also a fairly active contract. But that in and of itself shows you what's going on in the evolving nature of the liquidity out here in nat gas, because we don't normally see that much near dated paper going up in nat gas. Yet these days we do, because so much of the evolution, so much of the movement is so quick and so rapid. You want to have near dated contracts. You want to have all that gamma to take advantage of that and capture that. And that's exactly what we're seeing. Coming into showtime now on the week, we're at nat gas at about almost a 5.2, about a 5.19. That puts it off about 22 cents almost on the week, off about a little over 4% on the week. Obviously, since our last show last week, it's off 10.5%. So a big sell off since our last show. In the DEES contract, what is the vol? It is still holding firm at a 100, almost exactly 100.4 to be precise. So the vol is kind of unched on the week. In terms of skew, last week the bid was demonstrably to the calls. Nobody wanted to touch the puts. This week that has changed a little bit. Not too much, a little bit. Not as much as you might think given the sell-off we've seen. But last week the puts were 9.1% cheap. The calls 13.1% rich. This week puts are even cheaper. 13.3% cheap, and the calls a little bit less bid, 11.7% bid. So some evolution there. Mostly the puts getting cheaper, which is interesting. In fact, given the sell-off out here, you might think we might see a little bit different. But again, that's some of the things that happen when you move down the skew level a little bit here. Let's go on out to the options, see what the most active contract. Like I said, we're at about a 5.19 in the front future. It's the 4.5 puts going out tomorrow that have done the lion's share of the paper. 17,200 contracts out there. That's a lot of juice. And most of those going up on Monday, 9,000 of those on Monday, slightly closing them, followed by 4,300 on Tuesday, 2,000 on Wednesday, 2,000 today, total of 17,200 on this one, followed by number 2 out here. Looks like it's a bit of a tie between the 5 even puts. I expected something more along those lines because that's pretty much where we're hanging out. And the 5.5 calls, both of them doing about 12,000 contracts each. The calls slightly taking it for number 2, with the most active day being today, almost 4,000 on the tape, 3,700 yesterday, 3,000 on Monday. Looks like most of that bias towards opening throughout the week. And the puts right behind it with about 12,033. The most active day for those puts by far was Monday, 7,100. Maybe a 4.5 put vertical going up on Monday. Those options, the most active day for both of them was on Monday, and both of them were slightly closing by about the same amount. So that has the look and feel of perhaps a 4.5 put vertical going up out there. So active stuff, then about 3,000 going up today, 1,200 yesterday, not so much on Tuesday. So intriguing stuff out here going forward. Mr. Rhodes, I know you've been paying attention to the skew out here in nat gas as well. What's been lighting up your tape, sir?
Well, the skew part, I sent you a little note about this, so you're just giving me a nice leading question there. But the skew, it's heavy calls, and then when spring 2022 starts to roll around, all of a sudden, it looks like the puts are a little bit more expensive than the calls. I'm assuming that is part of the seasonality that goes along with natural gas, and that there's just a hope that spring will spring, or will be sprung, and it will be nice and warm, and the consumption of natural gas will go down, and at that point, any supply imbalances will have gone away as well. We'll see. But maybe that's just a little bit of hope for spring of 2022 being a normal time period.
A little bit of hopium for a spring. We also have some hopium that your questions will be awesome. Let's find out now. It is time for your Futures Options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options feedback. Submit your questions at twitter.com/options. Facebook.com/The Options Insider, StockTwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. We've already squeezed some of you on here with your questions about the Bitcoin prints and the polls and everything. Let's get on. Now, speaking of polls, Mr. Rhodes, you have an interesting one going on right now. Last week, we asked everybody in our audience out there, when did they start trading options? And perhaps surprising, perhaps not as surprising, fully a third of them said they've started in the last 18 months, so post-pandemic. So that's an interesting data point to work with going forward. This week, we asked a related question, a corollary, if you will, out there. We said last week we asked you when you started trading options. This week, we're going to ask you why. Again, it's hard to encapsulate all of the myriad reasons you might want to start trading options in just 4 choices, but we tried to do so nonetheless. Our 4 choices are: you want to catch the meme stock wave, you want to hedge your stock portfolio, you want to get higher portfolio leverage, or you graduated from trading futures and you want to turn it up to 11 with trading some options. Mr. Rhodes, what do you think is winning our poll so far today?
Is this one totally pointed toward the really new option traders?
This is pointed towards everyone, but you got to figure at least a third of the people responding have started in the last 18 months, right? Well,
and you got to, and I know from dealing with the youths that are just becoming involved in trading, and the ones that got all excited about the meme stocks and kept asking me about meme stocks in class, that catch the meme stock wave would probably be a really good answer there.
I would think that would be a safe bet, sir, but alas, the answer was no. Here, as I say this, now I have to go scroll to find where the results are. They have been pushed down. We tweet a lot of stuff out during the show. Here we go. All right. And so far, Mr. Rhodes, it's actually higher portfolio leverage, 56.5%, which kind of surprises me, followed by number 2, graduating from futures. That also surprises me. Nearly 22%, 21.7%. So I guess a lot of the listeners of TWIFO getting turned to the dark side. Number 3 is hedging your stock portfolio. And a distant fourth with only 8.7% is catch the meme stock wave. That kind of surprised me. I thought maybe the futures and that one would be opposite, but that goes to show our audience is full of surprises all the time. You got about a little less than a day left to play if you want to play listening after the fact on the podcast. Get over there at Options, make your voice heard. Why did you start trading options? Some of the alternatives, the others we've gotten have been fascinating as well. So hit us up with those if you have an interesting story as to why you got started trading options, maybe outside of the reasons we've given you here. Let's go out here to now Elvind. Hopefully I'm pronouncing that correctly. Elvind R. He just wants to know, he says, hi. Well, hello, Elvind. He says, one of the podcasts I listened to said you had a blog explaining 25 Delta quick skew. I tried to look it up, but was not able to find it. Would you be so kind to share the link? Yeah, that podcast you listen to is this one. It's TWIFO. We never said that we have the blog at the Options Insider, which is probably why you can't find it. The quick skew stuff is obviously put out by Nick and his team over there at Bantix, Bantix. So the place you want to go is the Bantix Technologies website. Bantix.com is the place to start. They have a lot of data there. Go on their FAQ and resources. I know they have some videos explaining a lot of their things. I'm not sure if they have exactly. I think it might, hopefully it's not for just the premium folks, but if you go over there, you should be able to find it. But what that 25 Delta quick skew is measuring, I should say, is the rate of change in the volatility levels of the 25 Delta call and the 25 Delta put, aka the 50 Delta risk reversal. I've always given Nick a hard time that it should be the 50 Delta. I get why he does it because they have a different one. They have a 20 Delta put. They do different ones. So that's how he delineates them internally. But it drives me crazy when people call it 50 Delta risk reversal 25. It's not. You have to add them. It's negative numbers. That's a conversation for another day. All right. So 50 Delta risk reversal, 25 Delta call, 25 Delta put. When we're giving you those changes in implied volatility week to week in that call wing and put wing, that's exactly what we're doing. How much it has changed, how much one is bid or offered versus the other week to week. So it's a fascinating data point and not really one you can find in most other places. For example, a lot of people talk about the skew index in the S&P 500 that SIBO puts out, but that's only once a day and it's one kind of obtuse number. Oh, today it's 135. Tomorrow maybe it's 140. You know, what does that number really mean? Where is the change coming? Is it in the put wing or is it in the call wing? A mixture of both? You don't know. With this quick skew, you do, because you can see exactly where the change is coming. As you can see, various products have all sorts of different skews going on. They could change week to week, which to me is fascinating, which makes the futures option so fun to analyze and talk about on a show like this. So yeah, unfortunately, we don't have the blog for it, but Nick and his team over there at Bantix should, or hit him up with a question if you have something specific over there, and I'm sure they'll be happy to walk you through exactly how they calculated where those numbers come from, if those are your types of questions. All right, let's roll out here. Another question from one of our pro members, Anthony Papadopoulos. He says, I believe he sent this in actually for one of our pro Q&A guests, Virginia McGlad. She's been on the show many times. We had to change her date, obviously, so we'll get her back on, Tony. You had other questions for her as well. We'll get her to answer all of yours directly. One of the ones you had was interesting. He says, I've been looking at the price action of rough rice recently. Yeah, who hasn't? It's been moving a lot. He says, it seems that very few contracts trade daily, as in a few of the other ag markets. Should retail traders stay out of these minimally traded markets analogous to palladium in the metals? Yes, palladium, another one that doesn't really do any options paper out there. And, Tony, I keep calling you Tony. You like Anthony. I'll go with that. It's like, I like to say Tony, even though clearly you're not Italian. You're Greek, but I digress. So, Anthony, it's interesting. That's kind of the standard advice we've always given on this show, particularly for newcomers to the world of futures options. Diving straight into something like a rough rice, which trades by appointment. Let's go pull it up right now. Let's go to the ags. And you go see grains and oil seeds. If you scroll all the way down there, you get to rough rice. And you will see this week, it actually has done about the same amount as Bitcoin. So that's not nothing. 573 contracts in rough rice. But this is literally kind of a trade by appointment type product. First off, it's an esoteric underlying. So you have to be pretty well versed in what's going on. What are the primary drivers of the price of rough rice out there? Then you have to be able to express that in some sort of options trade out there. And the problem with all these illiquid names, the problems are legion. First off, the obvious one, the spreads are going to be super wide because it's illiquid. So to get in and to get out of anything, you're probably going to have to hit bids and lift offers. So that adds a slippage factor into what you're doing, adds to the costs of your overall trade. It makes it hard, unless you hit a home run, it makes it hard to get out of anything with any sort of real sizable profit out there, because you're not going to be able to work things in the middle and no one's going to step up and fill you. So you kind of have to work that there. And on top of all the other issues we talked about, these are definitely, I would not recommend a starting point in a illiquid ag or an illiquid metal like palladium. Start in something you follow, that is deep and liquid. If you're an equities guy, you can't do worse than the E-mini. It does millions of contracts, even in crazy strikes. So you can always find something to trade in and out of. If you like small caps, you can go Russell 2000. If you like energy, you can go WTI or nat gas. If you're going to do ags, I wouldn't start much beyond corn. Corn does 400,000 contracts a week. It's deep and liquid. And if you have an understanding of the underlying there and the fact that the skew is going to evolve out there, I would certainly start there before I started in something like rough rice. Mr. Rhodes, what are your thoughts on Anthony's question here about diving into illiquid futures options as a newcomer?
Oh, you most definitely want to avoid. I couldn't agree with you more with what you said about kind of avoiding those illiquid markets, especially even if you put a small trade on and you decide you want to get out of it. It may cost you a lot slippage-wise just to try and get out of it. So that in its own right is going to kind of sour you toward options on futures. But sticking with a very liquid market, maybe one that's extremely high profile like corn, I think that's a great idea for venturing beyond equities. There are a lot of differences there, and you got to be very aware that the skew's like a teeter-totter. It does indicate or reacts to market forces as far as concerns about or hope for higher prices, or concerns about or hope for lower prices as well. But yeah, very liquid market. And maybe also and I don't know these off the top of my head, but any of them that have a relatively small notional or are on a market that's typically has very low volatility wouldn't be the worst idea in the world as well. Ooh, I hear the music.
Yes, the old saying, fools rush in while angels fear to tread. You could adapt that for the trading world and say, fools rush in where pros fear to tread. Obviously, not a lot of pros playing in rough rice options, so you probably would be wise to steer clear, at least maybe until you get your sea legs under you in the world of commodity options. But unfortunately, That music means we come to the end of another epic sojourn through the world of futures options. Our chat right now, our secret club chat, Mr. Rhodes, reminding me, I forgot, we joke about Portillo's and how delicious it is. A Chicago-based chain here, obviously, listeners. They went public today with ticker symbol PTLO. So our chat is all excited about that. Looks like they did pretty well. They're up 50-odd% from their IPO price. So there, Mr. Rhodes, A, did you buy any Portillo stock? And then B, you got some research coming up that may interest our audience, so give them some teases.
Well, first off, I did not buy any Portillo stock, but I did use Grubhub to have Portillo's for breakfast/lunch today.
Breakfast for Portillo? What was the breakfast choice? Do they have like a breakfast burrito?
No, it was basically a burger and fries. I just I kind of hit the ground running this morning, and next thing you know, it was about 10:30, and I had only had coffee. And had to get the energy up to keep up with you for an hour. And then, we mentioned the I'm going to be doing a little bit more on the NASDAQ and the NASDAQ futures just over earnings over the next week or so. And then as we talked about, I'm going to throw some trade ideas up late next week. As we get to the end of the month with respect to a potential Russell 2000 outperformance. And that'll be a combination of pure bullish on Russell 2000, but then some relative trades as well, maybe comparing it to the S&P 500. So there, that's what you would expect out of me in the next week and a half or so.
I like it. Get ready for the Santa rally in small caps. You want to learn more? Check out all of Russell's comings and goings. Of course, the easiest place to see all of that is to give him a follow on the old Twitters at Russell, 2 S's, 2 L's, and then Rhoads, RHOADS, all one word. You just got to spell it once for Twitter, then add it, and you're good to go. He tweets out all that stuff throughout the week, as well as usually changing his handle to something weird and slightly off-putting every week as well. So look forward to that if you give Mr. Rhoads a follow. You know where to go to find all these reports we're talking about here on the show, listeners. CMEgroup.com/TWIFO, TWIFO, or /TWIO. Both of those should work. Both of those should get you to whatever your heart's desire is. If you want rough rice, like our buddy Mr. Anthony did here, you can have at it till your heart's content over there, CMEgroup.com/TWIFO. And of course, you know where to go to learn more about all things small cap. If you want to learn about the Santa Claus rally, the volatility, the impact of COVID on all things small cap, and a whole bunch more, FTSERussell.com, FTSERussell.com is the place to go to kick the tires and light the fires. Give them a follow on the old Twitters as well, at FTSE Russell, FTSE Russell, all one word. Ironically, spells it just the way Russell did, RUSSELL. So stay tuned for that. A lot of great data coming out of them. That's it for us today, listeners. On the network, we'll be back again tomorrow, noon Central, 1 p.m. Eastern, to break down the world of volatility with volatility views. Then back again after that, 2 p.m. Central, for those of you in the secret club. Who knows? Maybe Portillo's will make it onto Oddities this week. We'll have to see. And then back again next Thursday, another episode of TWIFO. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.